Welcome to This Week in Money. I'm Jim Goddard. Today, CIBC Wood Gundy's Ross Clark comments on the Nasdaq and the S&P 500 hitting record highs and what that means. Could it be time for a springtime sell-off? Prominent Conservative Party of Canada leadership candidate Maxime talks about his economic vision for Canada. Privatization and lower taxes are a key part of his platform. He also wants to see free trade both internationally and provincially. Danielle Park, editor of the popular blog Juggling Dynamite, warns about all the debt bubbles surrounding us, from governments deep in the red to consumer debt.
Plus, at the end of the show, we'll have a company showcase update with Douglas Mason and Robert Middleton from Rainy Mountain Royalty. We'll talk to Ross Clark right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark. He's an investment advisor at CIBC Wood Gundy in Vancouver. Welcome back to This Week in Money, Ross.
Thank you, Jim. Nice to be with you.
The Nasdaq and S&P 500 closed out the week with record highs.
Yeah, the Nasdaq has been just grinding along so steadily, and that was no surprise that it would manage to do the high. S&P had been biding its time the last week and a half or so, and I think people were getting a little disheartened with wondering if it was going to roll over, but no, we've got a new high at the end of the week. It's part of the uptrend that we've basically been looking at as part of this first-year presidential pattern that hopefully will take us through the second half of May, and we'll see how it unfolds after that, because we are seeing some internals that make us just wonder how much longer the rally can go without a decent correction. The advanced decline line is starting. When we look at it, it's deviating a little bit from the market. It's not showing as much strength as the indices show. If we look at the percentage of stocks that are advancing above their 50 and 200 moving averages, that's starting to subside. This week we ended up with about 2.5% of stocks on the NYSE making new 52-week lows. So that is another questionable thing. And when we look at the S&P index itself, now that's a capitalization weighted index. So the Apples and Amazons and Microsofts, they have a much bigger impact on the index than the smaller names. And so if we look at the ratio, an equal weighted S&P index versus a capitalization weighted, it's showing some pretty good divergences right now. And the last time we saw anything like this, we had a 10% correction in the market. So there's enough things there that say that while the Nasdaq is leading and the S&P is coming along for the ride, there could be some vulnerability around the corner.
Will we be seeing some of that usual sell in May go away?
Well, I mean, typically you get a correction or some selling May, June, or July, and from there you get a summer rally. So this, we can easily be set up for the correction. I've been thinking that when it does come about, it's probably back to the 150-day moving average. That's the support area that we've been looking for. Now, an interesting thing's been going on here the last few months in that we say Nasdaq's doing so well relative to everything else. So you start to think back to its reminiscence of the dot-com era and what happened in 1999 through the first quarter of 2000. And then also it happened a few times in the decade before that. And if we take a look at the MSCI, the world indexes, and we look at the value and the growth indices there, and do look at the ratio, we find that the value stocks underperforming the way they are right now, the ratio is actually back to where it was in the first quarter of 2000 as growth was ready to roll over and value was ready to come back into favor. Also, it did this in the mid-1990s and back in 1986. So value is getting to be cheap enough now relative to growth that it can start to come to life. And you always worry that you could be looking at a value trap. Maybe, these stocks are underperforming for a reason. And when we take a look at the ratio, we see that it usually has two significant lows. The first one is usually the value trap. That happened about a year and a half ago. And now we're coming down for a retest of the same support. And this is exactly what we saw in the mid-1980s. You saw it in 1992, 93, and again in 2000. It looks as though right now, as these value stocks theoretically start to come to life, they will have some really good price action on the upside. So, it brings me back to days. I remember when we bought Brascan in the second quarter of 2000, while everybody was wanting to buy the high-tech stocks, and a year later we were very happy that we had gone for the more conservative side.
Is that what a lot of senior buyers or investors are doing right now, looking at conservative stocks?
I think they've got to be looking towards that. Most managers, you have to be careful. If they start to chase performance, they start to go after those names that have got a lot of good price action right now. You've got to be very, very leery of them, because when market turns, they're going to take it on the nose. I prefer to be looking for managers who are true to form, the ones who maybe have underperformed in the last year and a half. They've been very steady, but it's because they were looking for value rather than chasing momentum.
My guest has been Ross Clark, investment advisor at CIBC Wood Gundy, Vancouver. Coming up, Maxime Bernier, next on This Week in Money.
Always consult your investment professional before making any investment decision.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Maxime Bernier. He's one of the prominent leadership candidates for the Conservative Party of Canada. He's online at maximebernier.com. Maxime, welcome to This Week in Money.
Thank you very much for this opportunity.
Maxime, let's talk about your vision for Canada. It looks like Canada and a number of other countries are plagued by debt bubbles of all kind. Government spending, mortgage debt, consumer debt, corporate debt. Do you have an economic plan that will keep Canada stable during bad times if all this debt catches up to us, and allow Canada to prosper in good times?
Yes, absolutely. That's the core of my platform, the economy. What we must do, we must stop, first of all, these big deficits and balancing the budget. But for me, it is not an empty slogan. It is the reality. It is what I want to do. And how I will do that, I will first of all abolish the CRTC in the telecom. I will privatize Canada Post. I will privatize the airport. So that will help us to balance the budget and being sure that we'll have a pro-private sector investment budget. So that it is very important for me. I don't want to do like the Trudeau government spending money that we don't have to try to stimulate the economy. And actually, it is a sedative for the economy, not a stimulus.
The Bank of Canada's low interest rate policy has hurt savers while creating a number of debt bubbles. What kind of control does the Government of Canada have over the Bank of Canada And would you make any changes?
Yes, you're right. The interest rates are artificially low in Canada, and not only in Canada, but in other countries. So I was very pleased to hear that the Fed raised their interest rate a month ago, and they said at that time that they will raise also again this year the interest rate in the U.S. So I believe that the Bank of Canada will do the same thing, and that's important. So, but what I will do, because as you know, the monetary policy, it is under the control of the Bank of Canada. But what we can do as politicians, every 5 years, the federal government is signing an agreement with the Bank of Canada on the inflation target. And for me, inflation, it is a tax. When you have inflation of 2%, it's like having a tax of 2%. Your purchasing power is going down. So what I want to do, I will have an agreement with the Bank of Canada for a zero inflation target. Like that, the value of the money will stay the same, and that will help also the economy.
Are you for 100% free trade within Canada?
Yes, that's important. It's a shame that after 150 years that we don't have an economic union in Canada. That was the goal of our father, the father of our Constitution, to create an economic union, and we have a lot of trade barriers between provinces. And in our Constitution, we have the clause 121 that is asking for free trade in Canada for an economic union. So what I will do, you can do that. It's under the responsibility and the jurisdiction of the federal government. I will bring provinces in from the court and look at all the regulations, the legislation that are against free trade in this country, and bring provinces in from the court. And at the end, the Supreme Court will decide, and I'm sure they will decide in line with the Constitution. That would be the only way to have a real economic union in this country. We are waiting for the provinces for the last 22 years. They try to abolish trade barriers, and it is not working because there are problems.
Do you think it's ironic Canada's complaining about tariffs from the U.S. when Canadian provinces don't allow interprovincial trade?
Yeah, we must, absolutely. What we must do, we must work, and I have the plan to bring provinces in from the court for being sure we'll have free trade in this country. But also, with our free trade with the U.S., we can improve that. We don't allow milk, poultry, and eggs from the U.S. to come to Canada, and because of our system, we call that the supply management cartel system. It's a socialist system. They are fixing the price, the poultry, the eggs, and the dairy producer. Canadians are paying twice the price if you compare with the U.S. They are paying $500 more to keep that system. We must abolish that system, and we must put that on the table and say to government, to President Trump, you want to have more free trade? You want your poultry, eggs, and milk to come to Canada? Okay, we'll abolish the socialist system in Canada. Canadian consumer will benefit, but you must not impose tariff on our softwood lumber. You must open your country to our products.
Is socialism then a failed experiment in Canada?
It is. And when we have socialist policies, it is not working. So that's why people, they like my platform, and I'm a principled politician based on principle, free market, and there's no exception for me. Free market, it is good. It is the only way to create wealth and job in this country, and we must be proud of that. So that platform, my ideas, this campaign is based on 4 principles: individual freedom, personal responsibility, respect, and fairness. And that's why it's going well. But I'm an authentic politician. I don't have time to waste with policies that are not good for this country. So I will be focused to achieve our platform. And my goal is the platform that I'm having for this leadership must be the platform of the Conservative Party of Canada. And after that, the agenda of a conservative government.
What would you do to make Canadians free again?
Free again, first, it's a shame that we are working 6 months a year to pay taxes for the municipal government, the provincial government, and the federal government. The tax freedom day, it's about the 28th of June, and after that, 100% of your salary is coming in your pocket. Before that, you are working for these 3 levels of government. So for giving more freedom to people, to Canadians, it is starting by lower their taxes and giving them their money in their pockets.
What do you think are the best steps you could take to say Canada is open for business?
The best take would be the first budget, the pro-private sector investment. We must abolish, we have restriction in Canada against foreign investment. Investment, it is good. It is the engine of the economy, and we need to have more investment. So I will abolish the restriction that we have on foreign investment in telecom. We need more competition in the telecom industry that will benefit Canadian consumers. They will have more choices and lower prices. We must open foreign investment in the aviation sector. We'll have more competition there, and travelers in Canada will be able to have cheaper flights inside the country. So more open to foreign investment and having a policy that will bring more private investment, lower corporate income tax from 15 to 10, abolishing the capital gains tax. So that's a platform that will make Canada great again and competitive with the U.S.
Is that key to be competitive with Trump's America?
It is the key because right now, as you know, the Trump administration, they will lower the corporate income tax in the U.S. from 35% to 15%. So when they will do that, we won't be competitive. The capitals will go south. The money will go south. We need to have a reform, and I can bring a tax reform for entrepreneurs, but also for Canadians. I want them to save $30 billion a year. That's the cost of my tax reform for Canadians, and I will be able to implement that during a first mandate.
To stimulate Canada's economy and avoid a brain drain, should a single 15% flat income tax be implemented for incomes above $15,000? Yeah,
it's a shame in Canada that, if you count the marginal income tax rate in some province, it can be up to 54%. With my tax reform, the maximum marginal tax rate will be 46%. So what I want to do, I want to have a flat tax of 15% for 90% of Canadians earning between $15,000 to $100,000, and after that, another tax rate of 25% for people earning more than 100K. And yes, I want to do something for the poor. In Canada, if you earn less than $11,000 a year, you don't pay any income tax at the federal level. I want to raise that to $15,000. Like that, 1.5 million Canadians won't pay any income tax at the federal level. So that would be the way to give to Canadians more of their money in their own pockets.
Mr. Bernier, do you approach issues as left versus right or right versus wrong?
Yeah, I don't like that. When people are saying you're a right politician, right-wing politician, I'm a politician who believes in more freedom and less government. So that's why if we have challenges in our society, we need to have more freedom, and I believe in a civil society. So I don't think that the government is the solution for every challenges that we're having in the society. Sometimes the government is the problem. So we must have less government, we must have more freedom. And if you want to call myself, I think as a politician, I'm a conservative who believes in individual freedom and personal responsibility. And, that's right on the economy. That's right also on the social issues. I don't want to impose my values, my personal values on Canadians. So that's why freedom is always good, freedom of speech, freedom of religion, and that's the way to build a better society.
You're listening to This Week in Money. We're speaking with Maxime Bernier, one of the candidates for the leadership of the Conservative Party of Canada. Canadians are very cynical when it comes to politicians. Why should Canadians trust Maxime Bernier to do the right thing?
You're right. They're very cynical because politicians try to please everybody. I don't try to please everybody and say things that I don't believe. My platform is a strong platform, and I was saying during this campaign that if you're a special interest group and you want to have a privilege, don't count on me. I won't give privilege. I won't use people's money to buy votes. We have a platform that is based on fairness, and I don't have time to waste. I was in the private sector before. I was VP of a national bank in Montreal for 15 years. I'm in politics for the last 10 years, and I did a big deregulation in telecom, and I build a platform that is based on our conservative values that are the Western civilization values, And yes, I will do that. It wouldn't be easy for me to say I'm coming from both a riding that it's a half rural, half urban. It would be easy for me to say to the dairy producer over there, because I have the most dairy producer in Canada in my riding, to tell them, I want you to keep your privilege, and because I want to be sure to be elected. No. I told them, you have a strong privilege. Canadians are paying $2.6 billion more to keep that privilege, that cartel. I will abolish that for Canadian consumers, and I'll be successful in both. And actually, that was the most popular policy proposal. People really like that, because I don't do any compromise, and I will do the same thing. That platform will be the agenda of the government, and because I will, my goal is to be elected on my platform. I don't have any hidden agenda. This platform, I will campaign on that one as the leader of the Conservative Party of Canada, and I'm sure that I'll be able to explain that platform to Canadians and having a lot of support. And after that, I will have the mandate to execute it.
What could Canada do to become self-sufficient in oil and natural gas?
But first of all, we must, I believe in pipelines. We must have more pipelines. We must have the energy east. It's under the jurisdiction of the federal government. So let's have pipeline and no carbon tax. That's important. But, the energy we're not dependent on energy right now. We have oil and gas. We have other energy, hydroelectricity. We have nuclear energy. So we need to have policies that will promote all these forms of energy in Canada. And that's what I will do. And not only oil and gas, but oil and gas, it's one of the most important ones, but also the other energy. I don't want to have a regulation that will favor an energy, one sector, and not the other one. So let's have fair policy and being sure that we'll be able to have a lower cost for our energy in Canada.
Should equalization payments between Ottawa and the provinces be eliminated?
It cannot be eliminated. It's part of our constitution, but we must reduce that. We must reduce it because it is not fair that Alberta and BC are paying right now for provinces that are supposed to be poor, like my own province in Quebec. My proposal is to first freeze the amount of equalization money that we send to provinces and reform the equalization formula for being less generous, because we want to give a right incentive to provinces to develop their own natural resources. So like that, we'll have this debate, we'll change the formula, that formula will be less generous, and will give the right incentive for the other provinces to develop their natural resources. Some provinces are not doing that right now because they receive huge amount of equalization money.
Wherever there's duplication in government services between the provinces and Ottawa, does it make sense to eliminate that duplication?
Yes, for sure. You know, we have a constitution that is strict. We have some responsibility at the federal level. Provinces, they have some responsibility. We must respect the constitution. Like that, we'll have a constitutional peace in Canada, and that's the only way to have a constitutional peace, but also having a constitution that our constitution is very well done. You know, the provinces, they have the power that are near the people, because the best government for me is the government that is near people, and us at the federal level, we have jurisdiction and responsibility for national affairs, for defense, for the monetary policy, foreign affairs, and so we must respect that. And if we have duplication, it is against the Constitution, and it is not efficient also.
Would the elimination of corporate taxes, payroll taxes lead to the creation of more companies and also lead to companies to hire more people while lowering the prices of commodities?
Absolutely. That's why, you know, we share that jurisdiction with provinces. Provinces are imposing taxes at their level, but, you know, if we lower our taxes, that will give a great incentive, and I hope that provinces would be more competitive like us.
Canada is a resource-rich country. What needs to be done to ensure the resource industry prospers?
First of all, pipelines. You know, if you cannot sell our oil and gas in the U.S. and in other countries, that's hurting our industry right now and not imposing a carbon tax.
Maxime, how could people find out more about your leadership campaign?
they can go on my website, maximebernier.com, and they will have all the policies over there. And if they have questions, they can send me an email. But my main message to my friend conservative today is some of them will receive their ballot a little bit later, and I know that the party mailed that last week. So I hope that we'll have a good participation rate. That's important. So if you believe in our freedom platform, I hope that I can have your support, and we'll know the winner at the end of this month.
Would the election of a conservative government mean the end of the legalization of marijuana?
I don't think so. I will look at it. I don't know if I will vote for or against that bill. We'll have to vote soon. I didn't have time to read the bill. But, we're doing the debate right now. And so that's not my priority to reopen the debate. If I'm elected, my priority will be to work on the economy to be sure that we have the right environment for entrepreneurs to create wealth and jobs. And it's not a priority to reopen that.
Well, right now, marijuana stocks are one of the highest trading in Canada. Plus, governments do realize they would make billions in revenue from it on the taxes. Isn't that an important thing to look at?
Yeah, absolutely. It must be, I'll look at the legislation. It must be fair. It must be safe also for our children. I'll look at it. I'll decide what I'll do. But as you know, the Liberal government, they have the majority. They can pass that bill. But for me, let's have this debate. And if we need to change that, we'll ask for some changes at the committee in Parliament.
Mr. Bernier, thank you so much for your time.
Merci. Thank you very much. And have a nice day.
You too.
Bye-bye.
Bye-bye. My guest has been Maxime Bernier, one of the prominent candidates for the leadership of the Conservative Party of Canada. Coming up, Danielle Park, next on This Week in Money.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Danielle Park, editor of the popular blog Juggling Dynamite and president of Venable Park Investment Council Incorporated. Welcome back to the show, Danielle.
Hey, Jim. Happy May.
It looks like things connected to Canadian real estate are starting to unravel. Home Capital, and now one of Canada's largest realty investment companies, Walton Group, filing for creditor protection. What's going on here?
Well, there seems to be a confluence of factors, and they've been well earned over many years of hyping up asset prices in this country, adding on debt, filling income gaps by extending further credit, loaning well beyond reasonable levels to households, and it has really just, on the upside, it has made everything appear to be, growing faster than it would have otherwise. But when you have this kind of a credit push that drives all growth, like, for example, some 84% of Canadian GDP growth has now been coming from the real estate sector and related spending since 2010. So if you think about this, we had the oil crash, the commodities boom ended really in 2008. Then you had a reflation for a short period of time into 2011 as the world, the economy's central banks pumped liquidity into the system to try and reignite spending and demand. And what they did is they reignited borrowing, for sure. So you had a huge growth in debt worldwide. And in Canada, we did that with spades, right? So even though our economy had come to the end of a secular expansion and the main products that we had been earning our income and livings from were now in a secular decline, people didn't want to appreciate that or realize that. Our governments didn't acknowledge it, didn't make alternative plans. We didn't double down on, new lines of business, but rather we just went fully into consumer debt, and that drove housing and it drove auto sales to peak levels. But the trouble is that credit has now been retracing for the past few months in many areas of the world. In the commercial loan area, you've had negative declines in appetite for credit for the past several months. We think we've probably seen peak auto sales because, again, you're seeing 4 straight months in April of falling sales activity through North American auto dealers. And then right on cue, that story I put on the blog today about the influx of people who are saying we can't afford our car. Like, we got it on 72 or 84 months. We got it interest only. They threw in all these perks. But at the end of the day, we have too much debt to service and too little income. And so bankruptcy trustees all over are starting to say, hey, we're on the front line of this thing, and we're seeing that people are coming to us from all walks of life, from all ages, from all varying income groups, not just low-income people, people who have been making a good buck the past few years, but have been spending well beyond their means. And in doing so have lived off credit. So basically there's a point where everyone just says, I can't do this anymore, and they start going to the trustees and saying, I have to get out of these payments. I can't make it work anymore. And of course what that means is that all these record sales end up flowing back as bad debts, end up getting written off, flooding the used car market with product, driving down the cost, which makes the end use price available even lower, so that compounds losses in the dealer community and the financier community. And then, I guess what we're all getting here is, I think the word of the month, or the lesson of the week, if you will, is about liquidity. So what we've done is we've doubled down on assets. But people need liquidity to live, to pay bills. Even to sell your asset to somebody else, they need to have liquidity, right? So liquidity comes from savings, if you have cash, which very few people do, or access to credit. So when access to credit starts to slow, or you can't add any more credit because you're already at peak debt levels, that's when liquidity evaporates, and that's when you realize that you've been living the dream, but you don't actually have enough funds to cover your living expenses. So that's happening with individuals, that's happening with companies, as you pointed out, the Walton Group, which is Canada's largest one of our largest real estate investment companies, and it has properties, all through the West, Ontario, and also some in the U.S. And they also filed yesterday for creditor protection, just saying, first of all, we had this constant influx of investor capital for a long time. That sort of dried up in the last year. At the same time, we couldn't sell our properties. The U.S. developer community lost interest in buying more of our assets, and all of a sudden we don't have enough liquidity to fund everything. That, coupled with this downturn in Edmonton, which is where they were doing quite a bit of the house building. So, again, it's the same lesson that we're learning by watching the Home Capital story. People are sort of getting that connection. Hey, when I give deposits of my savings to these institutions, they're not just putting it somewhere and leaving it there. They're loaning it back out to other people. And so when I come to ask for my cash back, they can give it to me so long as not everybody is asking for our cash back at the same time. And then it's a question of how much risk that savings has been loaned out as, and what's the chances of getting the principal back. So right now you're seeing that cash crunch, the same type of cash crunch that Walton Group's experiencing is going on at Home Capital and other, Equitable Group and some of these other alternative lenders. Now, how it all transpires, these institutions may well get taken over by larger fish, and maybe indeed the deposits will be fine and it'll proceed for a while longer. But you can only kick this can so long when you've got too much debt in the system. And that's what we're seeing, for example, with Puerto Rico, which is another, example of this exact same model where for many years they've followed bankers' recommendations, the finance dudes, all the same schools they go to, they learn the same playbook. When someone's in financial trouble, what you do is you get them more debt, right? You don't restructure or change behavior or tell them how to, be more prudent, risk less, save more, build up strength again. They just add more debt and stir. And so now we have Puerto Rico going to the court this week saying, hey, we've got, $18 billion in bonds for sure that we can't pay, that were just general security of the government. We've got another $17 billion that we probably also need to restructure. And here's the real nub of the matter. We have $49 billion in pension liabilities that Puerto Rico has owed to retirees that are expecting to get a certain amount of income that are not funded. So they've got these obligations to pay out, $49 billion in liabilities on their books, but they don't have the capital to do it. And that's where I think the real motivation behind this restructuring is just this revelation that right now we have this massive amount of people in all the Western countries in the world, including China, becoming older by the day, dropping into the 65 and over bucket, needing to start drawing down income. And the gig is up, right? Because in Canada, for example, the census data says, hey, we've got more people over 65 now than we do under 15. And this is just putting all this pressure on a system which is undersaved and over-indebted.
That Stats Canada information that we have more seniors than children, what are the long-term implications? And could we help it if governments or the federal government actually brought in $10 a day childcare so people could afford children?
Well, yes. Well, I think, personally, I don't think that we can address the birth ratio, which in Canada is just about 1.52 of live births per woman. And that's actually less than the 2.1 that you need to have to keep the population at par, to not have it decline. You need to actually have full replacement plus a little, because not everyone lives, of course. So we've got that trend, though, not just in Canada, in most countries in the world. Only India is producing at, I think it's 2.5 live births per woman, so actually enough to replace them a little bit. So everyone in the world is actually, Canada has been more amenable to immigration than other countries, and so we have been able to keep our population younger than otherwise by the influx of immigrants. Now, as you well know, that is not a popular theme in the world today. Many countries are becoming less inclined to immigration, and that is going to accelerate the issues here, because we, as we've said, have this. We already know how many people were born after the Second World War. That population is locked in, and they're coming day after day towards this retirement expectation. Now, many people have realized in the past, 10 years that where they thought they would be retired in their late 50s was a complete dream, because that was never funded properly, and they are not ready to become retired. So they're working longer, but still, even if they work another 10 years, once they get towards 70, they start thinking, hey, surely I can retire here. And unfortunately, it's not a number. It's a question of what amount of capital and savings you have, and what sort of safe yields can you get off the principal in order to pay your living expenses. So this is where, I think Canada is not going to turn around and have a rapid resurgence in its birth rate at this point, because that's a normal hallmark of a developed nation where you have, equality of the sexes, you have women educated, they have a propensity to have less children. That's all a very natural, understandable phenomenon. So I don't think our solution is in suddenly how do we promote more births. I think it's going to have to be how do we smooth this out somehow, given that we've not prepared properly for it. We should have been, socking away more savings over the past 20 years, knowing that this imbalance was building. We should have, done a lot of things to improve the efficiency of our society, to lower our living expenses through things like intelligent energy and restructuring efficiencies that would make it cheaper to live. Instead, what we've done is everyone's doubled down on much bigger, more expensive housing. And that's exactly the wrong thing to do in this environment, because we've now got, 54% of our house supply is these single-family dwellings. Old technology, all fossil fuel-based typically, and that's the kind of housing that this elderly population is trying to exodus at this stage in their life. They want less maintenance, less cost, less, square footage and yard and all that. So you've got this huge supply of homes, just that perfectly timed with the housing bubble where they are extraordinarily overvalued, and you've got this sort of tipping point in the population where the people that own those homes are wanting to sell them and will do so. The gap between the over 65 and the under 15 only gets bigger, Jim, from here for about the next 40 years. That population is going to become more burdensome and more heavy, and fewer workers trying to support all the people trying to take money out of the pot. And this is where we get back to this idea of liquidity crunch, right? Because again, most Canadians, as in most Americans as well, have the bulk of their net worth in their home at this stage. And even if they're fortunate enough to have that paid off, they're dealing with a world of very low yields. So that is not likely to change quickly. We're not likely to go back to 6, 7, 8% interest rates in the very near term here, because we've got this massive weight of debt and deflation and aging demographics and technological innovation all coming at a time to keep price pressure down and therefore not push interest rates up dramatically. And meanwhile, you've got financial assets all overvalued as well, so that they're yielding the least amount of income possible from these prices. And so you really have this toxic soup, because people need income. They are getting low yields. They are going to have to come up with cash. This is what's happening in Japan already. Japan is already the eldest population in the world. Canada is going to be heading in that direction. In about 14 years, will be the same sort of percentage of elderly people as Japan is today. And Japan, we can see, they are ahead of us in this cycle. They've been there as a marker for us to look to know what happens when you keep pumping debt to try and reflate asset prices and your population's getting older. And indeed, what's happening in Japan, they're all starting to now cash in financial assets, sell real estate because they need cash. And they've been dealing with near zero rates for many years now. And so, again, that tends to be very, so central banks have stepped in to try and buy these financial assets off people, to soak up supply, to try and keep prices artificially inflated. But they're they're fighting a losing battle, because there's just too many people wanting to cash out, too many people needing to pay their bills that way, and too few people putting money in the pot. So this is the place that we're all coming to, and it's a global phenomenon. And I think, the quicker we quit trying to pretend this isn't happening and just acknowledge facts and make practical plans, the much better off we'll be.
We'll have more with Danielle Park next on This Week in Money.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the 4th largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Danielle Park, editor of the popular blog Juggling Dynamite.
Danielle, I heard one story. Perhaps Toronto has hit the peak of its market because somebody decided to have an auction for their house. Only one person showed up, and they didn't want to bid the asking price.
Well, I didn't see the facts around that particular story. I know that the data this week is that sales volumes have come down in Toronto. Interestingly, a huge surge, some 32% in new listings, and I can attest for that because I live in what they call the Greater Toronto area, north of the city of Toronto. But in our area, there is an incredible surge in new listings we've noted, with, again, this demographic. I think we've had this sort of manic fervor going on in realty, certainly on the West Coast for a long time. When you guys brought in, the foreign tax and some changes out there, you really drove from Vancouver, you drove that kind of foreign buyer frenzy to other places like Victoria. I saw the mayor of Victoria is now talking about saying they need to bring something in there because it's just gone lunatic fringe in that area. In Toronto as well, price increased 30 and 40% just in the last year. So what you see is that ultimately, policymakers say we have to do something. It's just like a house on fire. It's burning down. We have to do something. And so they start their policy initiatives, which have begun, as you know, in Toronto area as well in Ontario. So right away you get two things. You get a drop in buyers that were, either foreign buyers at the margin who are now pulling back a little concerned. You also get this frenzy of people looking to list because they're concerned also that these changes at the margin are going to slow the market or the prices that they're going to be able to get for their house. So anyone that was sort of sitting back in the last little while thinking, hey, in the next year or two, I definitely want to sell my house and downsize or move or do whatever. Now all of a sudden they're thinking, hey, maybe we better do it now. And it's those two forces are what always ultimately bring this the down cycle phase, because there's that frenzied, let's get our property listed, the rush to increase supply just as buyers are starting to be, either foreign people at the margins pulling back, but also, the bulk of the driver in this market has been Canadians speculating, not foreigners in the volume, but Canadians. There's been both things happening, but because we've had such low rates, because we've had all these alternative mortgage providers, right, like the Home Capitals and the Equitables and the financial trusts and all these different companies that have made it easier for people to get into housing with next to nothing down. This has been, this has put some other people on the run, so to speak, who were able to reach for these properties. Most, at least 5%. The home ownership rate in Canada today is 70%. The long-term average has been about 64%. There's at least 5 or 6% of the current population holding properties that ought not to be holding them, that never could actually afford them, but were able to stretch in thanks to all these incentives and, helpful mortgage brokers and all these people, rigging paperwork or, overstating things so that they could get on the quote property ladder. Those people are actually speculating. They probably didn't realize that they were, some of them, but they are speculating because they can't actually afford to keep the property long term or as an investment because rents don't make any sense. They don't cover the costs. So the only reason they're doing that is because they think that if they buy it, it'll go up, right? That is the very definition of speculation. And so you've got a lot of those people in the market that are going to have to get squeezed out in this cleansing process. As prices start to roll over, they can't hold on. And, in the U.S. it took about 10 years for this thing to clean itself. Their home ownership rate went to about 69% in 2005. That was the peak of that cycle. And it's now mean reverted all the way back to the long-term average of 64%. So that 5 or 6% of people that were only enabled to buy these crazy conditions and lax lending are now fully back out of the housing market again. So I think we should see a similar transition in Canada. It may take, again, the next 5 years to play out, but I think we're probably into that mean reversion process now. It's been a really long cycle. It's gone on far longer than it should have, but that means that our cleansing or mean reversion phase is going to be, deeper and longer than people would like as well.
In Burnaby, we're seeing the phenomena of cheaper rental apartments, low rises, 3 stories, being bought up and turned into luxury towers. Where do these people in the affordable apartments live?
Well, this is the thing. So again, if you think back to what they're doing here, they're all going after that same demographic. that 0.1%, who are all these aging people. The bulk of the people that have the access to capital, or the bulk of the funds in the country, are all in that aging demographic. So are the foreign investors, by the way, that everyone's trying to lure in or attract or hoping will come take their overpriced abode off them. Those are typically, the aging boomer demographic as well. So they can't, as I say, they can't be voracious forever. So it's completely counterproductive. They've made all the housing into this oversupply of too expensive not just for the regular working people and younger demographic, but too expensive for the older folks as well, as it turns out, because, like I say, in Japan we've seen this need to downsize expenses and to raise cash because of the low yield environment, because people are living longer, because their capital is not lasting the way it used to, and because they're now facing asset bubbles. A lot of people have a portfolio of financial assets, again, back at these peak valuations. Now, imagine the deficits have grown since 2008, even as the financial markets have recovered. The savings shortfalls in everything have gotten far worse, even as financial assets have gone back up. So now when we get into this next correction phase and financial prices come back down, just imagine the panic that this aging demographic is going to feel, and the urgency they're going to have to try and downsize their costs. So this means that I believe they're going to want to change the market focus, these developers and people who are trying to invest in the real estate space, just like they overinvested in the retail space over the past few years, believing they were catering to this, quote, high-end customer. They're already figuring out, wow, we really overbuilt. We've got way too much of this high-end stuff. We have to repurpose it. We have to figure out ways to make it into something that is realistic for who can consume what in the society. I think that's going to be happening with that high-end housing. We're going to get everyone catering to the younger person, the more medium part of the population band.
Danielle, thank you so much for being on the show.
Hey, my pleasure. Thank you.
My guest has been Danielle Park, editor of the popular blog Juggling Dynamite.
And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Maxime Bernier, and Danielle Park. And thank you for listening. Any questions for the show can be sent to info@housestreet.com. Now stand by for a company showcase update with Douglas Mason and Robert Middleton from Rainy Mountain Royalty. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of House Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HouseStreet.com.
I'm your host, Jim Goddard. Douglas Mason is president and CEO of Rainy Mountain Royalty Corporation, and Robert Middleton is the vice president of explorations and the company's QP, qualified person. Rainy Mountain Royalty Corp is listed on the TSX Venture Exchange, trading symbol RMO, and on the Frankfurt Exchange in Germany, trading under EK7NFF. Rainy Mountain Royalty Corp is online at rmroyalty.com. To start, Doug, please tell us about Rainy Mountain Royalty Corp.
Well, a pleasure. Thank you very much for having us on the show, Jim. Rainy Mountain Royalty Corp is primarily a Canadian exploration company that has been acting in the capacity as a project generator for the last 10 or 12 years. The company is in very sound financial shape, having recently completed an oversubscribed rights offering. It raised the company about $1,250,000, and also an additional private placement post that rights offering just in the last several weeks that'll raise another $500,000 for the company. So the latest initiative that the company's embarked upon was the acquisition of a property group in Northern Ontario we call the Brunswick property. Having ourselves well capitalized and having completed a lot of groundwork, we now have a planned drill program for mid-May. More on that, I'll pass the phone to our qualified person and VP Exploration, Mr. Bob Middleton. who is one of the foremost geophysicists in Canada, and we're very blessed to have him running our exploration programs.
Robert, so
Yes.
what can you tell us as the person in charge of the exploration operation?
Yes, thank you, Jim. Rainy Mountain has been putting together a number of projects in northern Ontario, the latest being Brunswick, which we got from a prospector that found the Borden gold discovery back in 2009 to 2015. And in 2015, Goldcorp bought out the junior company that had optioned it from Mike for $5 a share, $555 million transaction. And that ore will be trucked from the Borden site near Chapleau, Ontario, all the way to the mill in Timmins. Working with Mike, who I've known since 1983, we selected this particular property called Brunswick in Brunswick Township. It's 6 miles long, which is 9.6 kilometers, and it had a gold showing that Mike had found with assays up to 32 grams. There's a number of 3.5 to 4 gram assays over an 8 meter width. So we got our plans and permits done and did our geophysical survey, which is called an IP survey, induced polarization survey, and outlined a number of splay faults coming off a major structure, which is called the Rideout Fault. And the Rideout Fault actually extends through Brunswick all the way west through Chester Township, where IM Gold are developing a large low-grade gold deposit, and then past the Jerome mine all the way over to Borden, where the project there is being developed now by Goldcorp. So it's a similar geological setting as Borden. However, it's less metamorphosed, and it's very, very similar, in fact, to the Bell Creek mine in Timmins that I found for Rosaria Resources back in 1979, which is now Lakeshore operating it, which got taken over by Tahoe. So these major structures that occur, like the Rideout Fault, have sister faults like the Destor-Porcupine Fault and the Cadillac Fault and the Larder Lake Fault. And all the major gold camps are associated with these major structures. So in particular, as I said, the project is 6 miles long. We've initially, last fall, only covered a 1.3 kilometer section of a little postage stamp over the gold zone and found these other parallel structures. So there's actually 5 structures there, not just one. And we're presently extending that grid both east and west of the original grid. We're adding another 2.4 kilometers to the west, another half mile or 800 meters to the east. And have extended the IP anomalies that we initially got and extended those structures and found some new targets as well. So the plan is that we have a permit to do trenching, and some of this is very shallow overburden. It's not deep overburden like it is in Timmins, but we're probably going to do some trenching after the snow is gone. The snow is usually melted by the 10th of May, thereabouts. So we're starting to see outcrops peeking out already. And we're going to be doing some more mapping prospecting on those. But with the IP survey, we found a number of really strong anomalies associated with an arsenic antimony anomaly that we discovered last fall. And arsenic and antimony are important pathfinders for finding gold. Often they're associated either directly with the gold mineralization or surrounding it as a halo. And the Bell Creek discovery, that's exactly how we found Bell Creek. We hit 1,000 ppm arsenic with a couple of, they're not mediocre, but 300 parts per billion gold hits. And we moved the drill only 100 meters to the west and hit a bonanza hole with 50 chunks of visible gold. So that's the actual discovery story on Bell Creek. When we did the geophysics here last fall, we used a new approach called, it's a deep IP method, where instead of going down just 6 layers, we went down 20 layers, and we actually found other zones at depths that never would have been seen before within this major shear structure that we've been following. I've got 10 holes presently planned now on the east side grid, and we're still in the process of finishing our IP survey on the west side. We've got 5 of the 12 lines completed. And as I said, we've got a very strong IP anomaly associated with the arsenic antimony anomaly there. And we're going to be adding additional drill holes, probably another 4 to 6 holes over there already, that from the data that we've seen to date. So drilling will start after the 12th of May. The contractor presently is drilling for IM Gold literally next door, and therefore we have no mobilization charge to bring the drill 12 miles from that property over to our property. IM Gold has also picked up all the ground they could get their hands on east of us as well. And I've known the fellows working for that company for some time. A lot of them are just ex-Noranda geologists that have worked with me on joint ventures in the past. So we have a pretty friendly relationship with them. However, Tahoe, which was formerly Lakeshore, are now about to develop the Max Juby deposit to the east of us. That's another large low-grade deposit, but in similar rocks to what we have, carbonated basalts. And east of that is Orico, which is now Alamos Gold. They are actually in production. And east of that at Kirkland Lake is Kirkland Lake Gold. And Tony McCooch is the new CEO of that, who came from the Lake Shore. And he's out looking for acquisitions. Of course, in Timmins, you've got Goldcorp. So there's 5 majors in our neighborhood that are interested in acquiring things once they're outlined. So that's the role we play as a junior, is to make that discovery. Now, some of my shareholders are pretty optimistic. They've seen me work on the Hemlo and saw 3 mines develop there. So if we get one hit on these structures, there's going to be others. We've got 6 miles, which is 9.6 kilometer strike length, which is the length of Hoyle Township back in Timmins that contains the Hoyle Pond deposit, a new discovery south of the Hoyle Pond, the Owl, and the Bell Creek, and a couple of other small discoveries that are just being made around Bell Creek, all in that 6-mile distance. So we have similar geology, similar alteration. We already have the gold showings, and we have the porphyries that are now just being discovered today in Hoyle Township, because it's all covered in overburden up there. We've actually found them in outcrop, and those are what are called the heat engines that have helped form the gold deposits. So we have all the elements that you would ever want in a gold setting, and the possibility of actually turning this into not just a discovery, but into an actual gold camp. So as I said, we're going to start drilling here in May, and assays probably start coming by the beginning of June, because it takes 2 weeks to turn around assays. And it's really easy for us to prep the samples, as the prep lab is right in Timmins, which is just about an hour's bus ride from our site. The bus comes through every night. You can put the samples on the bus, and they're in the lab the next morning. Or you can personally drive them up. So that sort of summarizes the Brunswick project. And as I said, we've had other projects in the past scattered around Northern Ontario. There's other companies spending their money on the projects. That's why the name Royalty is in the name of Rainy Mountain Royalty, symbol RMO.
Back to Doug for a moment. Doug, it really sounds like you've assembled a very experienced team.
Yeah, Jim, so you can see why we're all excited in the Rainy Mountain Royalty Camp. We're in the right area. We're in elephant country. We're surrounded by majors and mines in relative close proximity. We've got the right geology. We've taken the project on slowly and carefully, doing deep induced polarization, which has given us a good snapshot of potential mineralization. So we've been able to identify drill targets. We're financed and ready to go drilling. Can't think of a better time to invest in the company prior to a pretty good-sized drill program, while the company's currently at quite a low market capitalization of under $5 million. So that, as you had mentioned before, please visit our website at rmroyalty.com, or you can call our shareholder relations line at 604-922-2030.
Doug, Bob, thank you so much for the update.
Great pleasure. Thank you very much, Jim.
My guests have been Douglas Mason and Robert Middleton from Rainy Mountain Royalty. We've been speaking on April 27th. I'm Jim Gondry.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.